Hey guys, what's going on? Coming at you with a Thursday morning video. So I did some more buying yesterday. So I did buying Thursday and I did buying yesterday. So that was the first time I've bought in stocks in the past really 7 to 10 days. When the market went rallying up to the CPI report that we got Tuesday, people were a little bullish. They thought that maybe inflation was going to come down a little more than what they thought. Obviously, as we know, inflation missed core and headline. It was slightly a little bit higher than what analysts anticipated. It was lower than the month prior, but it didn't come in as expected. So I think Wall Street just kind of panicked and big money got out of it. Retail investors are kind of hold their own. I mean, if you look at the small and mid caps that really Wall Street isn't in, they really didn't get hit as bad as the major indexes yesterday. So that kind of shows you like one of the indicators of that actually happening. So two stocks I did buy yesterday, Palantir, ticker is PLTR. This is going to be a futuristic company. They have information and data that they sell to the government. They will move to large companies and then mid-cap companies probably down the road. They're so far ahead in technology of what they actually do to their business model. And I feel like it's one of those things where a lot of people can't wrap their heads around how big it's going to scale. Alex Karp, who's the CEO, he's super intricate and super, I don't think he sells his company well, but he's so intelligent and he just sees things way better than what most people see or how he can explain his own company. So I think this is going to be a multi-billion-dollar company down the road one day. So I'm just kind of, building a position, and I'm not going to make it like a top 5 position, but I want to have a large enough position to where, if that does happen, I will be reaping the benefits. Just pulling it up real quick. So like last year when, the market was rolling and everything was hitting 52-week highs, this company was $29.29. It hit lows of $6.44 and it closed yesterday at $7.63. So I bought at $7.40. I roughly bought 10% of my position size. The market cap's $15 billion, so it's not really that big of a company. It's like a mid-cap, smaller mid-cap, but so it was $29 a year ago, and now we're sitting at $7. So if we get back to 52-week highs one day, which I think we're going to go way past that in the coming years, in my opinion. So you're already 4 or 5x just to get back to your 4x to get back to your 52-week high. So I'm trying to really build that position out right now. I think the bottom is in on the small and mid-caps, so any pullback, I'm just dollar cost averaging at this point. So my cost base is $11.72. I was buying the stock in the high teens. It was sitting around that 22, 25 range for a really long time last year. And when it fell down to the teens, I started my position, and I've been dollar cost averaging down. So now we're at $11.72. But I think when I started buying, like I said, it was $17, $18. So we're working it down slowly. If it continues to fall, I'll continue to build out. But again, I own 17 stocks. This is like probably a number 12 or 10 position of mine, so it's not really that big. Meta, on the other hand, this is a stock I really believe in. Advertising is not going away. I think Zuckerberg has, it's one of those guys you just don't bet against. He's still very young. He's a great balance sheet in his company. He is really driven still, and he still has that fire in him to continue to grow and to continue to build his brand. So you can't really say against any other of the big guys, but I think Zuck is going to do big things in my opinion. So I bought more of his stock. I've owned this stock since 2019. Crazy to say I'm buying like 20-30% under from when I started buying in 2019. This stock, if you pull up like a 5-year chart, it's at prices that it was at like 2016, 2017. It's just crazy how much Instagram's grown, how much Facebook's grown, Messenger's grown, WhatsApp. Like there's so many things this company has. They're going into the metaverse, which it's unknown right now. But even if you take the metaverse out, they're burning a lot of cash right now, but their balance sheet's so good. This company will figure it out. It's trading at a silly cheap evaluation, in my opinion. So I bought at 150.40. I roughly bought about 5% of my position. The reason it's so little, it seems, is because my position is getting so big. So when I chip at it, it's like less of a percentage. My cost base is 174.83. When I started buying this in 2019, it was 190-ish. So, this is, it's crazy that I'm buying it for 150 right now. It's just a crazy thing because I remember last year the stock was around 300, 350. I wasn't buying then because I thought it was a little frothy. The PEs were a little high. just like everything else in the market, to be honest. But yeah, so it's just crazy. I'm buying at this. I never thought I'd get it for under like 175 or 180 ever again, or really my cost base for that matter. But I am, so I'm buying it. Ford PE right now is 13 for a growth company. It's basically trading at like a value. Or almost like a dividend evaluation. So even that's cheap. I mean, really, they trade at like 15, 17s. Growth usually trades around 20 to 25 PEs. So it is basically Wall Street, and people are just writing off Meta. Like, they think they're done. They had their best days, they're done. I don't think they did. I'll put my money where my mouth is, and I am buying this. So that's why I'm doing that. Dow finished up. It had a very weird day. It opened red, went green in the beginning of the AM, then it hit red all day. Then at the very end of the day, Wall Street decided, hey, maybe we should buy. There's not much selling pressure in small and mids. Maybe the algo saw something where it's like, man, maybe we did put a bottom in. Maybe they digested the CPI report and really saw that it really wasn't that bad. It hardly missed by 0.1. Like, yeah, that's not good, but like at the end of the day, it's not like we came in at like 10% CPI or like 9.5, like a huge shock. Shock and all event would have put the market way down to probably testing lows again, but I don't think that's going to happen in my opinion. So Dow was up 0.99, S&P was up 0.33, NASDAQ was up 0.74. My portfolio was up 0.82, so I outperformed the market, hardly, but I did. So that's good. The QQQ, which tracks basically fintech and like the NASDAQ top 100s, that is sitting at close at 296. When it goes to 300 per my Fibonacci retracement, that's at the 23% retracement line. A lot of people are trading off that if you're doing like TA and stuff like that. 3333 or 333, that's the 50% retracement. So this is basically when we get to like this number in the QQQ, I'm probably going to lay off the gas unless we have multiple months of, you know, inflation going down, or I start seeing company earnings getting a little more optimistic and, you know, saying like, oh, we're going to get through this. There's still a lot of uncertainty and doubt, and we don't know if inflation is getting under control and how high the Fed's going to hike. I think they might over tighten, but they could always pivot and U-turn, just kind of like with COVID. And people forget about that. The Fed, it's easier for the Fed to pivot and U-turn and create money than take away money. People forget that, so don't forget that part. So that like people, Wall Street and people don't talk about that, but like in reality, it's easier for them to stimulate the economy than pull away money. So if it's over 50% retracement, I probably will not be buying. So right now we're under the 23% retracement. So I am buying really anything under 300 that I really like. Railroads, you know, if you guys have been following the news or anything like that, the railroad union is going on strike. That's going to fuel the fire of inflation. I think it's like $2 billion it loses in revenue every day it's on strike or close. So I think they're trying to come to a deal now. As this video came out, maybe they came to it, but they need to get that resolved because that's just going to cause more fear with inflation and supply chains and stuff like that. If you're long in the market, like kind of like me, you could almost look at this as that's not going to be forever. Yeah, it's going to hurt in the short term. Yeah, it's going to pull down the stocks because people are going to freak out and panic, but it just gives you even more better of a deal for buying opportunity for the long term. So really depends on how you look at it. For me, I don't really care which one happens. If this pulls down the market even more because of this, sweet. I'll buy my favorite companies for a cheaper valuation, get more shares. If it doesn't happen, okay, the market might just come back a little bit because that fear is, you know, over. So that's all I got. I'm trying to get 1,000 subs by the end of this month. So if you guys haven't subscribed, please hit that button. It's much appreciated. Till tomorrow, peace.